Our base case still project a U-shaped recovery. We're not expecting a sharp V-shaped recovery because the divergent path in economic recovery and the post-pandemic reopening will underpin a pretty uneven recovery. So we start to see market concerned about the risk of a second wave of outbreak. So far, we noticed the outbreak in Beijing seems to stay relatively under control, but we do expect potential reversal in terms of numbers of the coronavirus cases until we got a reliable and effective vaccine for global deployment. So I think the policy stimulus introduced by global central bank and governments remain a key support for the market because this actually substantially reduce the tail risk of more permanent damage caused by the pandemic on the economy. And at the same time, with this unprecedented policy support, including the fiscal stimulus measure directly delivered to household and corporate, so this would also help to extend the momentum of recovery. But given the divergent path in this reopening process, our investment strategy continue to stick with a selective positioning in terms of market and sector exposure. Just look at Asia. We are more constructive on the recovery outlook in North Asia as compared with the ASEAN and South Asian regions as the latest challenge faced by India, Indonesia would reflect the South and ASEAN market may take a bit longer time to come out from the pandemic impact. In North Asia, as we see the relatively effective virus containment and pretty decisive policy stimulus that have provide support for the rebound in economic activities. Let's say in China, China is actually the only country that have the May PMI data staying above 50. So we think that the recovery driver would be a more important catalyst for the recovery in the equity market. So we are currently stay overweight China and South Korea in our Asian equity allocation.